It's a positive start. It's a mixed picture actually across the Asia Pacific, but the Japanese markets are trading in gains, as is the Taiwanese index.
A strong cash position of the government, plus you have the added impact of the RBI dividend.
Indian bowlers led by Jasprit Bumrah defended a total of 176 from a near impossible position to clinch the World T20 title.
On the upside, the Nifty needs to take out 24,174. And that's not very far away. The Midcap index is also starting in a very unusually quiet.
And remember one thing, we are not only focusing on quantitative growth, we are focusing continuously on qualitative growth.
The sector which is topping the chart is Nifty IT. The Nifty IT index is a gain of 1.8%.
We believe the way to build the future of EV in India is to really build the core technology in India.
They are quite bullish on the demand trajectory for the tractor makers. So all in all, you'd have to say it was a mixed bag this time. All right, so the markets are cheering as well. 120 points higher on the Nifty right now.
Sharpest strategies, top market trends, unmatched perspectives, the trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Well, the market is roaring, and I think the market is saluting the fantastic performance that we had from the India World Cup winning team, and gains continue here. What a way to start this July. This is Closing Bell. We're coming to you as always from the CNBC-TV18 Motilal Oswal studios. Last hour coming up, I'm Prashant, with me, my colleagues Reema and Nigel. Guys, good afternoon.
Hi, afternoon. You know, I read somewhere that seasonally July is a very strong month for our markets. And most of the months, most of the Julys we've actually closed up in the green, and the start has been very strong.
I think that's why you're wearing the color, right?
I'm wearing the color. I'm wearing the color of the market color of IT today.
Well, that's right. You know, and in fact, as Virendra Sehwag said, right, looks like the markets are breaking out. It's a bit of a breakout moment for the Indian cricket team, and our markets as well, 24,000 and counting. And you know, today it's a really good day because of the broader markets. You know, as we speak, still you have 2.5 stocks that are advancing for every one stock that's declined. So close to 1,600 stocks still advancing. That's telling you it's been a really, really good day for the markets.
With and this is after the 7% gains that we've had in June. So it's quite something, right? 0.5% in the Nifty, 0.4% in the Nifty Bank, IT index up 2%. That's essentially what you've got going. Out and out bullish kind of session. I mean, 2.5 is to 1, 3 is to 1, approximately in that range. Advances outnumbering declines. Except maybe PSU stocks. So you look at PSU banks, CPSU stocks, they're taking a bit of a backseat. Apart from that, it's a really good-looking screen out there, which we will continue to discuss. So, you know, volumes are not very... I was looking at a broader market list. It's in favor of advances in terms of what is up, but it's not a... it's a limited list as compared to an unlimited list that we've had over the last couple of weeks or so, with a humongously long sort of volume-led gainers out there. So in that sense, it's a little limited, but numerically, I think absolutely no problems. Almost 3 is to 1 in favor of advances is what we have. So good session on our hands once again as we begin this week, begin the month of July, and begin the second half of this particular calendar year as well. Reema.
Hi. So numerically, IT is the best performing index with a gain of about 2.1%. But if you pull up the contribution plate, you would see it's actually HDFC Bank and ICICI Bank, which are nearly contributing 50% of the Nifty up move. And both these stocks are looking up today. There you have it. HDFC Bank and ICICI Bank together are up close, contributing about 55 points to the Nifty up move. And then you've got all the other IT names, coming through. Other than that, ITC is also a strong stock. On the way down, it's Reliance Industries and L&T, which are weighing partially. But of course, IT is the big story. It's stolen the spotlight, and we'll talk more about it in the last 1 hour.
Well, that's right, Reema. It's a good-looking screen. ITC, a couple of heavyweights as well, supporting what the IT index is doing in today's trading session. So let's find out what you do from here on and how do you position yourself for the final hour of trade. Nagraj Sethi now joins us to help us out with some closing strategies. Hi, Nagraj. Good afternoon and good to see you, Ben. Well, a good start is what we've seen in the trading session. And all through the day, actually, we're building onto the gains. We're still holding with a gain of around 130 points. And the larger cap names are doing well. You know, whether you look at the heavy private sector banks, tech, ITC in the last few minutes. What's your take, on the Nifty? Where do we scale up from here on? And in terms of what level does your long bias get negated at?
Hi, good afternoon, Nigel. Nifty has been in a strong uptrend since after the breakout of the range movement around 23,600, 650 levels. Last session's consolidation has been taken out, will be taken out very soon. I'm expecting this uptrend is likely to continue. Nifty is strongly in an upside momentum as per the smaller and larger time frame. The next upside levels to be watched from here on is 24,400 levels, followed by the next upside target of around 24,950 level, where the important Fibonacci extensions would come in.
Okay, all right. And you've got a couple of individual stocks that you're tracking as well, Nagaraj?
Yeah, I have two stocks. First one is from energy side, IEX, Indian Energy Exchange. And chartically, this IEX has witnessed a decisive upside breakout in today's session, which is happens to be a bullish flag breakout around the 185, 186 level. Overall chart pattern is looking positive. One can look to buy around this level, currently trading around 188.80, 189. The upside target would be at 202, and one can place a stop loss at 180. Second one is from a midcap front, the data pattern. For the last 5-6 sessions, data pattern has been in a range-bound action, repeatedly testing the hurdle of a downsloping trend line. The overall chart pattern is looking positive. Higher tops, higher bottoms is intact. I'm expecting this stock to show a decisive upside breakout from here onwards. Currently trading around 3046 levels. Immediate target would be around 3200 levels, and one can place a stop loss at 2950.
Got that. We'll come back to you for more ideas and sort of trades, etc. in a bit from now. But IT stocks are buzzing today. The index itself is up over 2%. And this after a pretty good week that we've had, the last one. Rima is standing by. First off the block in terms of earnings. So is this pre-positioning which is going on. Rima, over to you.
Thanks so much for that. So today there is a double upgrade by CLSA on Wipro. They've raised the target price to 607, and now their rating is an outperform. There are two key reasons that CLSA cites when they upgrade Wipro. One, there are initial signs of success under the new CEO, Srinivas Pallia. In the current quarter, the company won a large $500 million plus new communications deal. This is the first large deal win in over 3.5 years. And the second reason is the probability of a buyback, because the last buyback for Wipro closed on the 29th of June, which means they have the window to announce the second buyback. The second reason is the street is anticipating a pickup in growth in the current quarter, and that's how the numbers stack up. In the large cap space, expect Infosys to report the highest growth at 2.5%. But even for a company like Wipro, for the last 5 quarters, from Q4 of FY23 to Q4 of FY24, the company was reporting negative growth. But this quarter, the street is anticipating a flat or maybe a slightly positive growth. So a pickup in growth is what the street is anticipating going into the Q1. Now you will ask why? What's changed? One, Q1 is a seasonally strong quarter. Two, the ramp up of the deals, the large deal wins that the companies have won last year will all contribute. And third, according to Kotak Institutional Equities, there is a reducing intensity of cuts in discretionary programs. Another factor which is likely to help IT companies this time is that the guidance is going to be stable. Don't expect a cut in guidance. I think that was the big fear. Even Accenture reiterated their guidance. And when Accenture didn't cut their guidance, you saw stocks Accenture react positively and even the Indian IT companies. So both HCL Tech and Infosys are likely to reiterate their full year guidance, and that's going to be taken positively. And look at the way the stocks have started moving up. IT was a rank underperformer through Q3 and Q4 over the last 6 months because we saw EPS cuts, we saw stocks getting derated in terms of valuation multiple. But in the last 1 month, the stocks have actually surged. And that's the reason why year to date now it's turned positive with a 4.5% up move. But all those gains have come in literally in the month of June itself. And the index, as a barometer, is up nearly 14-15% in the month of June. That said, after this kind of a recent surge in momentum, ICICI Securities points out that it's now trading at about 27 times forward multiple, which is at a 32% premium to the Nifty, which is higher than the average premium the Nifty IT typically trades over the Nifty. So that's, the caution that you need to put on board. But, these are some of the factors that have gotten the entire sector very excited today. Back to you.
Okay, all right, Rima, thanks a lot for that. Well, Deepan Mehta from Elixir Equity joins us on the show. Deepan, you heard what Rima had to say. She's given us 5 top reasons why these stocks are buzzing around. What's your view? What do you like from the IT space?
Nigel, good afternoon, and thank you for having me on your show. As usual, Rima has covered it so well that there's hardly anything that I can add to what she has said. But, IT has been a bit of an underperformer. And in markets like this, bull markets like this, investors, when they have fresh money, they want to see where they are kind of underweight in, which are the underperforming sectors, where is there a valuation gap based on a PEG multiple or a return on capital employed. And on those data points, you will find that IT certainly has scope to move up, at least recover some of the lost, recover some of the underperformance which it has had over the last 2-3 years or so. And maybe fresh money flowing into IT stocks. Also, I suspect that positive FI flows also could be having an impact on IT stocks. But at least in terms of numbers, investors shouldn't expect immediately next 2-3 quarters a sharp improvement in the performance. But the 25-26 next year could be a very good year for IT stocks, and traders may be buying in before those numbers start to trickle in, because they have the benefit of base effect, and a lot of the large big ticket orders also get into execution phase.
Deepan, afternoon. What about Persistent Systems in particular, which is up 7%, and the street is expecting a 5.5% kind of a revenue growth in Q1, and even Oracle Financial Services. Oracle had a very strong Q3, and the stock got re-rated, I think, in the month of January earlier this year. Then Q4 were regular, normal sort of numbers. But the stock today is up close to about 4% and on pretty large volumes. And there appears to be a bit of breakout given the kind of volume traction that we've seen. Where do you stand on Oracle Financial Services?
See, I think Oracle Financial operates in a very narrow range, and a lot of their income depends upon licenses and then associated projects to those licenses. And end of the day, it's all dependent on the Oracle platform. Whereas a Persistent System has its own IPs, has its own variety of sectors and segments and projects and applications which it can work on. So to that extent, it has got more flexibility, and it has got a greater, I would say, pie in terms of exploring to grow its revenues. Whereas Oracle has a very narrow pie, which is why also Oracle has underperformed the larger IT pack over the last 10-15 years or so, if you see. So from an investor's perspective, although Oracle is a great company available at reasonable valuations, I would go with Persistent Systems, where growth rates can be exceptionally high, and there's a high degree of earning visibility as well as stability, because the basic model of Oracle is that there can be always volatility in earnings because of license when they book the license fees. So I would go with Persistent, and some of the other interesting mid-cap IT stocks also, Coforge comes to mind. Emphasis also looks interesting, and even some of the very niche players like Tata Elxsi and KPIT. That's where we are going to have an eye on, and if they're available at reasonable valuations, then those could be good entry points.
Okay, all right. Deepan, I wanted to ask you about these gold financiers. The rank outperformer has been Muthoot. It's done much better than Manappuram if you look at it over a longer term chart. But if my director just pulls up the chart in the last 1 month or so, Manappuram suddenly has come to the party. The street believes that maybe valuations closures are around 1 times in comparison to Muthoot that was at around 2 times. They have a IPO as well that they could come out with, which could unlock some value as well. And now Manappuram actually is outperforming. What's your view on both these two names? Do you believe that there is now more value in Manappuram and you'll stick to that one? Or do you go with the larger player, that Muthoot, that's actually delivered much better as well in the past?
You're right, Nigel. And not only that, in crunch times, Muthoot has done much better than Manappuram. The gold financing business also has had several upheavals. They have had their bouts of high NPAs, and they have had a lot of challenges as well. They have seen a lot of competition also coming from other NBFCs and banks. And Manappuram lost a lot of market share, but Muthoot was able to, manage its NIMs, manage its NPAs, and manage its manpower, I think, far better. Also, Muthoot focused largely on gold loans, whereas Manappuram has now gone all over the place, offering all sorts of financial products, lending products, not just gold loans. But you're right, I think, Manappuram's performance has been worse, which is why the P multiple also is lower. But now in blue sky scenarios like this, and a major player out of the system, that is IIFL, I think that, again, we are seeing renewed focus on both these companies. And I would say that, yes, Manappuram, there is a case for a higher P rating, considering the company can easily grow at double digit to be available at 1-time book or 9, 10 times, 12 times. I'm not sure the P multiple, but it is very, very cheap. There's a scope for re-rating taking place over there. And in a market like this, Nigel, we are really, scraping the absolute barrel for low P stocks. And Manappuram, Muthoot certainly are stocks which are not at very high price earnings multiple. In fact, they are just about or slightly below their average also.
I was reading Bernstein, the sell side firm. They have 4 stocks. I mean, they actually came out with a small cap portfolio earlier this year in January. And that portfolio was made up of 4 small cap stocks. A small cap portfolio, beg your pardon. They have a model portfolio, small cap portfolio. And I think today they've come out with sort of some changes. And I think Muthoot has found its way into that particular portfolio, Muthoot Finance. There's just something sort of latest in that sense. Pull up Religare if we can. I don't know, Deepan, if you own it or if you have any thoughts. So late June, you basically had SEBI, which issued that show cause notice to the Religare board and chairperson, right? Really sort of very, very strong words. And I don't know if this will hasten the process of, them coming up with putting up the open offer announcement, etc. And will it sort of pressurize the board, not just the chairperson, Religare, Ms. Saluja, but others on the board as well, independent directors, etc. as well, to take a more nuanced and balanced kind of view. Stock's excited, 8% higher. They own, I think, 64% in Care Healthcare, which is the second largest standalone health insurer. And by some estimates, their holding in Care is more than the market cap of Religare. Just your thoughts. If the big trigger always has been if it becomes a Burman family company, and then you get some re-rating. Just your thoughts, Deepan.
Well, Prashant, I think you know much more about the company. I did not know about this Care Healthcare part, and maybe I should look it up. Because the minute a company comes under so much of controversy and the way Religare has destroyed value in the past, it just goes off the radar. And when it comes to financials, especially on the lending side or investment side, there is so much of choice, and a lot of it is at attractive valuations as well. So you tend to ignore Religare and there are many circles in play over here as well. So I would say on a fundamental basis, it's difficult to justify buying into Religare. But yes, I think if it becomes part of the Burman family, then we can expect better corporate governance, improved performance, more aggression as well. But that many ifs and buts over here. But on the other hand, we discussed Manappuram, we discussed Muthoot Finance. There are a whole host of private sector banks, also PSU banks, which are extremely attractive. There are vehicle finance companies, there are wealth managers, there are stockbroker like Angel. So there's so much of choice when it comes to financials that I think that, having a small allocation in Religare also doesn't make sense, because over a longer period of time, it cannot really outperform its peer group.
By the way, Indus Stars continues to move higher. Over the last 2 days, like Friday and today, some of the other telecom stocks have started seeing some consolidation. There's profit booking visible in Vodafone Idea. Even Bharti Hexacom was down last week towards the end. But Indus Stars continues to rally day after day. Today marks the 6th consecutive day of gains. And in the last month, it's up 10%, taking its year-to-date rally to about 94-95%. So some of the reasons why Indus Stars has benefited more than some of the telecom operators on the back of the recent news flow. One, Indus Stars is a B2B player. The telecom operators are B2C, and B2C is far more competitive. Secondly, because Indus Stars has operators, on their towers, it's a far stickier business. And it's a big beneficiary of the improvement in the health of the operators, particularly a Vodafone Idea. And there was this IFL note which came out in April, I think, where they said that Indus Stars could garner 80% of the incremental sites that Vodafone Idea decides to put up. So as Vodafone Idea increases its capex, the big beneficiary is going to be Indus Stars, and according to IFL, it could be an 80% market share. Also, the street, remember, is hopeful of a dividend from Indus Towers. It was a dividend-paying company till May of 2022. There was a last dividend paid by Indus Towers, and then because it had so many receivables due from Vodafone Idea, it stopped paying dividends. And now the expectation is the dividend will resume for Indus Towers. And finally, as many brokerages have been pointing out, the stock trades at a very steep discount to global peers, close to about 50 to 60%. Dipan, quick word on Indus Towers from here.
Yeah, first, the disclosure, we and our clients are invested. I like the story of Indus Towers, and I think it has got a good upside from here because performance has been pretty stagnant for last several years for reasons which you all know. But now that the entire sector is livening up, they will have some flexibility in increasing their yields also from existing towers. And yes, the Vodafone expansion will certainly benefit them.
All right, Dipan, before we let you go, I want to know your view on cement. You've not been a fan of that, but there is suddenly some consolidation that's taking place. We've been hearing about Penna Cement for years. We've been hearing about India Cement for years. Now you have a so-called financial investment, at least as of now, by Ultratech into India Cement. And Penna Cement has folded into the Adani Cement Group. Now the street believes who's next. If you look at Orient Cement, now that stock suddenly is up close to around 7-8%. We've seen this in the past as well. But now the street believes something's got to give, and at a price, maybe a lot of promoters actually will come to the table. Your view on them, and how would you play it? Will you go for the mid-cap names that could get gobbled up, or do you believe the large will get larger? Let's stick to them.
No, Nigel, I think if you want to buy cement, go for the best companies in cement. That is the top 4 companies, Ultratech, ACC, Ambuja, and Shree Cement. You could even look at a JK at best. But I think just stick to these companies. And yes, I think the view remains negative to neutral on cement because the way the expansion is coming on stream, I think that there could be a squeeze as far as margins are concerned. And a lot of the benefits which they have had of lower input costs, those are fast vanishing. So I want to be a bit circumspect when it comes to cement.
Okay, all right. We leave it there. Dipan, good speaking with you here as always. Thank you very much for your time. We take a quick commercial break here, but the conversation continues. Karthik Kumar from Axis Mutual Fund will be with us on the other side. Stay tuned. Okay, welcome back. The market, I think, is doing just fine. We've got 132 points on the Nifty, so pretty steady from the word go. More auto sales numbers are coming up at the bottom of the screen, and we'll have Sonia with us in just a bit. But Karthik Kumar is also now joining us. He's fund manager at Axis Mutual Fund. Karthik, good to have you with us here. Thanks for your time. I was just looking at the portfolio that you sent across, and you are, I see that you're underweight IT services. And I think that would be and this is a Quant portfolio, right, Karthik?
Yeah. Yes, I do manage the Quant fund. Yes.
How would you reconcile with the recent rally, and are you comfortable sitting out if there is a how would you deal with it? Because June has been a great month. The IT index, I think, is up about 8.5%, and it continues as we start this July with another 2% today.
So, I mean, absolutely, you're spot on. It's been a bit painful while I've been underweight IT over the last couple of months. But the way I reconcile with my positioning is basically from a data perspective, is that if you look at it, there is a lot of divergence between stock performance and earnings improvement, especially if we look at possible earnings improvements over the next couple of years. And what you're seeing is that the breadth of earnings revision within IT still continues to remain negative. The breadth of recommendations still continue to remain negative. While IT has underperformed the markets over the last couple of years, the valuations per se is not cheap either compared to its own historical premium versus Nifty. So barring the only point, which is IT having underperformed in the recent period, the other points kind of give comfort as to why one would be underweight IT, as in I would be underweight IT as at a sector level. While I do have exposure at a stock level, at a sector level, these are the data points that give me comfort in terms of position.
Okay, all right. Hi, Karthik. Good afternoon, Nigel on this side, and good to see you. When if I look at your portfolio, I think private sector banks is something that you've liked, in terms of weightage in comparison to the PSUs. And now suddenly those private sector banks, actually valuation-wise, you're getting the most comfort over there because the stock prices haven't moved up while earnings have been steady. Is that the big theme still? Because even after the recent rally, still valuations are fairly comfortable. Your take?
I completely agree with you there. Valuations are comfortable, and selectively within private banks, you're also seeing growth visibility, growth stickiness, and that gives you a lot of comfort within this market where pockets of growth and reasonable valuation are few, and it's quite difficult to find. So I think in that context, that positioning gives you a fair bit of comfort, not just from a return perspective, but also from a risk perspective.
Karthik, I can see you're overweight on FMCG. Is this a recent shift in your portfolio, or have you always been for the last, say, 6-12 months positive on FMCG? Because increasingly, a lot of investors have tilted towards FMCG post the election mandate and the expectation that we will see welfare spending.
Actually, the overweight in FMCG is quite a recent development over the last 1.5 months. Prior to that, I was underweight consumer staples and FMCGs in general, in particular, and that's kind of changed over the last 1.5 months. And the exposure is more towards names that do have higher rural exposure, and that is coming from the fact that the earnings expectations on those stocks have kind of gone up, and they've gone up impressively in terms of expectations over the next couple of years. Part of that is a function of expected government stimulus on the rural side. That could be one of the reasons. But even other than that, those names seem to have decent earnings visibility and support in the near term.
No, got that. Just a quick word, if you will. I mean, some of the other areas where you're overweight, right? Healthcare, auto ancillaries, engineering and capital goods. So you want to just highlight, especially in something like engineering and capital goods, what are the kind of names which constitute this segment in your portfolio?
Engineering names predominantly. I mean, I continue to remain overweight engineering names for some time now. As I said, that's while that space has gotten slightly expensive from a valuation standpoint, from a quality standpoint, or from a growth standpoint, that's where there is comfort. If anything, the visibility continues to improve in that area, which is why I am overweight that space, and I'm overweight that space through some of the MNC names listed in our markets. So that is on the engineering side. Autos, again, is another area where I have exposure to two-wheeler autos, which do have reasonable rural exposure, along with some ancillaries. So that could also be a possible beneficiary of any government stimulus if that comes through. And lastly, pharma is within healthcare. I am overweight pharma, and pharma is a good mix of both robust international markets as well as good domestic markets as well. So all of these three. For different reasons, but in all, I see solid earnings visibility across these three sectors. While barring industrials, the valuation remains on par with markets with the other two sectors.
Karthik, what about telecom? Everyone's waiting for the election outcome, and part of the street had positioned themselves for these price hikes that we've been hearing about in the last 100 hours or so, with regard to all the three frontline telecom names going ahead and increasing tariffs. Now, in a couple of your portfolios, I think Bharti Airtel is one of the large weights you'll have out there. How much of the good news is in the price, you think? Because the stocks have done very, very well. All three of them. Reliance is a little bit more diversified. Bharti Airtel has been a big outperformer. And Vodafone Idea has given you a quick fire of 50% in the last 2 months. Your view?
As you rightly pointed out, we do have exposure to telecom through the name that you mentioned, and we continue to remain bullish that particular name, and we have reasonable exposure to the sector as well. I think part of the story has played out through the hikes that have come in, but I think the industry dynamics would only continue to get better from here on, which is why we continue to have a positive view on the sector as a whole.
Okay. Karthik, do stay on. Sonia is now waiting by to give us an update on how the June monthly sales numbers looked for the automobile companies. Sonia.
Well, thanks a lot for that. So, it's been a mixed bag for the auto sector this time. So, we're getting a lot of the numbers thick and fast. Let me take you through some of them. For Bajaj Auto, actually, the sales growth was better than what the muted expectations were. So, we saw barely a 5% growth for Bajaj Auto. And this was because the two-wheeler exports continue to see pressure because pockets like Nigeria, Egypt, etc. continue to struggle a little bit with growth. So domestic sales were up 8%, but export sales were up only 1%. Moving on to Escorts Kubota, the weakness continues in the month of June. Company says that a delayed pickup in the retail season impacted sales this time, and the June total sales are down 2.6% on a year-on-year basis. Let's move to M&M, which was a mixed bag this time. Auto sales saw double-digit growth, 11%. SUV sales were strong with a growth of 23%, while tractors continue to be in single digits, up just about 6%. The company says that retail momentum has definitely picked up, supported by land preparation and an increase in Kharif crop sowing. Maruti has also come out with their numbers. Now, there the auto sales are looking strong and they are higher than what the street was estimating. Total sales growth of 12.5% year-on-year for Maruti, coming in at 1.79 lakh units. Now, this is because of a strong jump in export sales for Maruti. So, if you look at it, exports are up 57% year-on-year, coming in at 31,033 units. Domestic sales are largely quiet, but it's a pickup in exports which the street will definitely like. And finally, you also have Ashok Leyland, where the total sales are down about 2%. Medium and heavy commercial vehicle sales are down 4%. LCV sales are up just about 3%. So, commercial vehicles are slightly on in the slow lane right now, but passenger vehicles like Maruti doing very well. Back to you.
Sonia, I was away in Kenya and I thought a lot about what you had to say, because every second bike is a Bajaj over there. Every second bike over there, okay, the 100, 125cc. And if you go into, Mara, which is where you go to see the animals, you have a lot of the tractors that are used to transport people. And you have that Mahindra being, say, there's a moment of pride as well. Wow. You feel like you're in India. You see TVS, you have Bajaj, and also you have the Mahindra at times. So I wanted to click a photograph, but at that point of time, only the tractor wasn't the Mahindra one. So by the time I clicked it, but...
amazing to see all these, domestic brands go bulk, global in a big way.
In bulk, in bulk. And particularly when you have to go for that hot air balloon, then to transport you to that, only the Mahindra one takes you. The Mahindra tractor with their entire basket behind. So just, something that I thought I'll relate to. But Karthik is still with us. Karthik, you heard what Sonia had to say with regard to the auto sales. Just want to refresh in terms of your positioning. What about the two-wheelers, if you have any comment on that?
I continue to remain overweight autos, and primarily a lot of that is coming through two-wheeler exposure and some auto ancillary plays, less of four-wheelers, but predominantly two-wheelers. Yes, I do think the companies there, and especially the ones that I have reasonable valuation, coupled with good rural exposure as well. So continue to hold that position.
Any green shoots promise in the specialty chemical space, which has been beaten down?
I still continue to remain underweight specialty chemicals. That's been the case for quite some time. While the valuations are getting cheaper than are getting cheaper, but still there is lack of visibility with regards to earnings in general. So I still continue to remain underweight that space.
Okay, all right, Karthik, we'll leave it there. Thank you very much for your time. Good speaking with you here on CNBC-TV18. As always, it's a pleasure. That's Karthik from Kotak Mutual Fund, manages the Quant Fund at Kotak AMC. Well, 24,150 is where the Nifty is at, which is 136 odd points higher. And there is, of course, I mean, a lot of stuff which is going on. I think market breadth has become a little, almost 3:1. MGL has been doing well. MGL is up 7.5%, but I think it's not just today. I think even Friday was a strong session. So last Thursday's close on MGL was 1,500. Stock 1,700 plus now in 2 sessions. That is Friday and today. So something's definitely happening. Chola Holdings is another one which is up. Again, big move. Thursday's close was under 1,300, and stock's at 1,635 right now. So that is Chola Holdings. Policy Bazaar, big move once again here on this name. Iron Exchange is up 17-18% now. And I saw Viatech Vabag as well, which was up 5%. That's something new. Home First has been buzzing since the word go. I'm not sure if there's any particular news flow here, but I think there was an initiation from one of the brokers last week, 9% on Home First. There is Exicom, which continues to rally, which is up another 10-11%. So lots of stuff. Vaibhav Global, long lost name there, 8% higher in Vaibhav Global. It's really, in a relative sense, of course, has done nothing. And that's coming up a little bit. EPAC is up about 7%, 260 on that one. PG Electroplast is up 9%. Voltamp is up 9%. Man Industries is up about 10%. Sharda Cropchem 10.5%. There is Stovecraft, which is up 9% right now. Axicades is up 14%, just under 600 rupees on Axicades, so on and so forth. And all of them backed by very, very decent volumes at this point in time. Just one more name, of course, which is in focus is PVR Inox. And this is, of course, on the back of the new movie, the new release late last week. This is Kalki, which has reported strong box office collections over the weekend. Stocks reacting. Vamakshi is here with some details. Vamakshi.
Well, absolutely. It was a blockbuster weekend for Kalki 2898AD, and it continues to be a blockbuster Monday for PVR Inox. In fact, Kalki became 2024's highest grossing Indian film in only 3 days. Total net India box office revenue stood at 302 crores as per Nuvama. In fact, on the first day itself, they managed to get India box office collections of around 95 crores. The content pipeline is looking up for PVR Inox after 7 lackluster quarters. In fact, upcoming films include Sarfira, Pushpa 2, The Rules, 3-2. The Hollywood content pipeline is also seeing an uptick, and this is coming after settlement of writers' strike seen last year. So a good pipeline out there as well, with films like Despicable Me 4, Fly Me to the Moon, Deadpool and Wolverine, Transformers 1, etc. But apart from the strong content pipeline, there are several other triggers playing out for PVR Inox. Ad revenue growth is expected to sustain over the medium term. In fact, the company said that ad revenue will be reaching its pre-COVID level in absolute terms in FY25. Fruition on cost control initiatives are also expected to play through in the medium term. The company is being very prudent with its screen additions, and in fact, they're shutting down unprofitable screens. They also are targeting to reduce debt. Their target is to be a net debt-free company, and they have plans of monetizing a large land bank of around 300 to 400 crores and use the amount that they raise from there to pay off debt. They're also looking at premiumization of the portfolio. The premium screens in the portfolio stand at around 14%. They're expected to take it to around 20%. And definitely with better mix of the premium portfolio, they will have better margins. So again, this bodes well. So overall, given the performance of Kalki as well as the upcoming content pipeline and several other triggers that are lined up for the company, we have brokerages like Nuvama and MK giving a buy call on this counter. Nuvama has a target price of 1,995 and MK has a target price of 1,650 per share.
Thank you very much for that. As Mamakshi pointed out, it's been 7 months of lackluster content, so the stock hasn't done anything. Year to date, PVR Inox is down 10%. But now, of course, it's bounced back. Get into a break. On the other side, we'll get you a few BTST calls from our technical experts. Stay tuned.
Welcome back. BHAL has suddenly moved up in the last few minutes and seen actually quite a sharp spike up. I recall when we started off the show, actually BHAL was in the red. So that spiked up a little bit. Just take a look at that, moving to the high point of the day. HDFC AMC, that's another one that's moved quite well in the last few minutes. So that should come up for you on the screen as well. Well, Nagraj Sethi is back with us. Nagraj, what are the trades you have for us at around 3:10 p.m. today?
Yeah, if you look at the Midcap IT space, there is one stock, Bsoft, Birlasoft. It has been moving in a consolidation pattern, range mode action over the last few weeks, and today made an attempt of upside breakout of the range. Overall chart pattern is looking positive. Currently trading 717. I'm expecting upside breakout in the stocks, and next the stocks next resistance to be what around 765 to 770 in the next a few weeks.
Okay, got it. All right, Birlasoft, that's the stock that you're talking about. Well, thanks for that, Nagraj. We'll come back to you with some queries as well. Let's talk about another big mover, Signature Global. Well, that's higher in trade today after the company reported 2,700 crore rupee in sales from its titanium SPR project in Gurugram. Earlier today, we spoke to the company's CEO, Rajat Katuria, where he shared his outlook as well as his insights on demand trend. Let's listen in to what he had to tell us earlier today.
Sector 71 is going to be one of the significant geographies for us, micro markets for us. This lies on the southern peripheral road, which is up to a lot of development work. by various agencies. So we have about, access to about 90 plus acres of land over here, and which will provide us development potential in excess of 17 million square foot. Of that 17 million, we launched about 2.1 million square foot about 10 days back. The response was very good. We've sold almost 85% plus, the units which we had put on launch. For this particular year, our target is to achieve about 10,000 crores in terms of pre-sales, of which, this project already has contributed about 2,700 odd crores. In Sector 71 per se, we'll have like a sustained supply over, a few years to come. This year, our overall target is to launch about 3.5 million square foot in Sector 71.
Okay, well, that is the view coming in from Signature Global, the real estate company based out of sort of NCR, Gurgaon mainly, a large parcel of land in Gurgaon, which is up for development over the next many years now. So that is some of the commentary. Sudeep Bandyopadhyay is with us from Indie Trade Capital. Sudeep, good to have you with us here. Thank you for your time. Once again, a fabulous session on our hands. So let's just start with a couple of stocks straight off the bat. The power theme continues to be running pretty hard. Voltamp is up some 8-9%. I saw, actually, stocks have done well, but you still have brokers who don't have coverage on the space, initiating coverage and coming in, weighing in. I mean, I saw a report this morning from Spark Avendus, which is initiated on transformers. A whole host of companies there. And of course, I've been saying, well, it's a long runway for growth. As with as with many sectors, the question, of course, is are stocks already pricing a lot of the growth in for the next couple of years, and you need to have a much longer holding period. What are your picks there if you track it, if you own stocks in the space, power, transformers, that value chain? Sudeep.
Well, Prashant, I think this is one sector where we have been extremely bullish for quite some time. I think there is a paradigm shift as far as power sector in India is concerned. Initially the fear was that traditional power is going out and, it will be all renewable energy. So people were focusing on renewable energy. But the realization soon came that renewable energy will happen, but that cannot replace, the traditional power, which is thermal power in the short term and even medium term. And we've been seeing flood of orders for new thermal capacity. BHEL has been flooded with boiler orders from NTPC and others. So while thermal is growing rapidly, so is renewable, including hydel. Under these circumstances, the entire space, power sector ecosystem is in for an excellent time for the foreseeable future. Now, the power demand is also continuously increasing with, power for all becoming reality. Every nook and corner of the country has got electrified. Power demand is continuously increasing, and the use of power in every household is increasing. So under the circumstances, I think this entire sector and related companies, including the financing companies, will have a good time, will have fantastic business opportunity for the next 5 to 10 years. Of course, our preference always will be for NTPC, which even today, in spite of the run-up, it does look excellent. And, there is a green energy company sitting inside NTPC today. They are talking about some corporate action whereby this company probably will be separately IPO'd. We'll have to see that. But the fact remains NTPC is immensely valuable, and they're the best possible power stock available at this stage. The power ancillary is the entire, the transformers and rectifiers. You can look at APAR Industries. You can look at a whole lot of other power-related companies, which we like. We also like the power financiers, PFC, REC. The demand for setting up new capacity is humongous. And this cannot be financed only by private capex or from the usual commercial banks. So the power financiers will have a significant role to play in the foreseeable future. Overall, we are extremely positive on the power sector. You have to select the specific companies, but by and large, we believe that in spite of the valuation, this sector has a long way to go.
Okay, all right. Hi, Sudeep. Good afternoon. Good to see you. And I wanted your view on CGD companies, the city gas distributors. And, before we get your view, I just wanted to pull up MGL. That's now hit circuit. It's up close to around 10%. But the difference between the futures as well as the cash market, it's close to around 80 rupees, I think. So let's just get that up for you on the screen. That's the cash market stock that is up close to around 10%. But in the futures, it's still at around 1,680 rupees. So I think we should get the futures plate as well that comes up for our viewers on the screen. Cash market rate is there. In a short while, I think that should be up as well. Sudeep, what's your view on the CGD space, particularly on MGL, which has now hit upper circuit in the cash market itself? The futures is still up close to around 6.5% or thereabouts. So there's a bit of a spread between both of them. Sudeep?
Well, Mahanagar Gas definitely, we were wondering always that why it is not doing much. They have got a fantastic area of coverage, and they have a whole lot of coverage which they haven't really expanded to. So Mumbai and the suburbs, which is their area, half of it still is not directly supplied by Mahanagar Gas. They are working on it. They're expanding rapidly, and the encouragement from the government is there definitely to ensure that the CGD companies are the last mile suppliers of gas to the households and to other users. Under these circumstances, I think all the CGD companies have a fantastic future. Yes, as far as valuation is concerned, to my mind, I think the valuation has reached a level where I don't see too much of immediate upside in the near future. Of course, Mahanagar Gas is at an upper circuit right now, and probably there is some excitement around that. But from a long-term point of view, I think it's a good buy, but not too much of upside is expected in the near future.
Okay, one set of stocks which continue to be active today are many of these defense shipbuilding stocks. So Cochin Shipyard and Garden Reach Shipbuilders are surging on the back of some news flow, order wins, partnerships. Upasana joins in with the latest.
Thanks so much for that. First up, let me start with Cochin Shipyard. The company sees significant export orders. Udupi Cochin Shipyard, which is a wholly owned subsidiary of the company, secures additional orders from Wilson ASA, Norway. The contract involves designing and building 4 dry cargo vessels with an agreement for 4 or more by September 2024. These will be diesel-electric vessels built for transporting general cargo in European coastal waters, and the project value is around 1,100 crores, and it is expected to be completed by September 2028. Mind you, last month the company had indicated that it is expecting very strong traction for export orders, especially from the European region. Next up is Garden Reach Shipbuilders. The export order momentum continues as company backs contract worth $21 million for construction of advanced ocean-going tug for Bangladesh government. And this project will be executed in 24 months. Let us see the recent export order wins that the company has seen last month, that is in June 2024. Company had signed another contract with Bangladesh for delivery of TSH dredger and had also entered into a contract with German company for the delivery of at least 4 multi-purpose cargo vessels with a contract value of almost $54 million. Hence, Garden Reach Shipbuilders will also be in focus on the back of gaining export momentum.
Upasana, thank you very much for that. By the way, IGL is also moving up. IGL is now up close to about 4%. PB Fintech has had a 10% up move on very large volumes. And Black Box, a stock which came to our notice last week for the kind of price and volume action, it's another 10% up move on Black Box. And now it's, I think, rally in the last 1 month stands at over 50%. Sudeep, wanted to get your thoughts in on Mumbai real estate. We were having a chat earlier with Knight Frank, where the June registrations, property registrations for Mumbai continue to surge, 12% up on a year-on-year basis. And it's been clocking 10,000 plus for every single month this year. And, Ghulam was telling us that, we could expect a, price increase to, stay between 7 to 10%. So lots of players in the Mumbai market which are listed. You've got Macrotech Developers, Godrej, Prestige, Keystone Realtors, Rustamji. Anything that you like?
I think real estate is having a time of a life. I think post-COVID there is an upswing, and that upswing continues. The upswing has started with the residential part of it, and I think now in a lot of metros there is excitement in commercial as well. And now I believe that around the budget or post-budget, we'll start seeing excitement on the the lower end of the housing. The government is taking a lot of initiatives in that space, and that segment also will start getting excited very soon. Under these circumstances, I think Bombay has witnessed fantastic sales, fantastic numbers, and fantastic business for the upper end housing space. And commercial hasn't shown that kind of a promise yet. And lower end housing, of course, the Bombay city, it's not possible, but suburbs and outskirts probably will start seeing excitement very soon. As far as the specific companies are concerned, we do like Godrej Properties. I think this has got a lot more legs. Apart from Mumbai, Pune, NCR, they're also expanding into other geographies. They've acquired land in Hyderabad. And I think that's another market which should start giving them good dividend over the years. We also like Lodha, Macrotech, that is. I think they are also, witnessing strong sales momentum, and a lot of projects are in the pipeline. So between Godrej Properties and Macrotech, we will recommend buy for long term.
All right. Sudeep, stay with us. There's 7 minutes to go for market closing. We're going to take a quick commercial break here with, of course, news that index is absolutely steady, 127 odd points higher. We're back. And we'll, of course, look at the market as we go into the close for the first session of the day, first session of the week. It's a great one to kick off this month of July. Stay with us.
Welcome back. We're virtually going to close at the day's high today. We had a soft start, but through the day, the markets have been inching up. The dips have gotten bought into, and the Nifty is closing comfortably above 24,100. The sensex gaining close to about 450 points. Sudeep, any interesting takeaways from the auto sales numbers that we've seen?
Well, I think, the Bajaj numbers were a little disappointing. The exports had started picking up. Unfortunately, there are still, once again, problems creeping up as far as their export of two-wheelers are concerned. This is a bit worrying. Otherwise, Bajaj was performing fantastic manner. Let's wait and watch. Maruti, I think, on the other hand, the export news was very good, and we'll have to keep watching this space. To my mind, as far as automobile numbers are concerned, at some stage we will have to start looking at the export numbers very, very closely, because if we are believing that India can become a manufacturing hub for the world, we'll have to monitor the export numbers carefully, and that's what, to my mind, is important now for some of these companies, whether it's Maruti or Bajaj. As far as tractors are concerned, Rima, I think the story is still not out. Escorts numbers were depressing, whereas Mahindra and Mahindra was okay. Let's watch how numbers pan out in the coming months.
Okay. State Bank of India is going to get a new chief. The current CEO, Mr. Dinesh Khara, will be stepping down. Will that make any difference to State Bank of India?
Well, not really. I think it's an established management with a record, and still the new incumbent has been with the bank all his life, and he has been holding a very responsible position. I don't think anything changes. It will be business as usual.
Okay, all right. We'll leave it there, Sudeep. Good speaking to you, but stay with us. We'll come back to you after we wrap out things. We're 114 points higher on the Nifty, 24,124. I think the Nifty Bank, that's basically 0.5% or so. And I think something similar for the Nifty Bank, which ends about 1/3% higher. So a little off the highs of the day by close, especially from 3 p.m. onwards. A little after 3 p.m., I mean, the market came off. And the mid and small cap indices also, they did better. Midcap index full 1%. And I think the small cap index even better with a 1.5%. So actually, the mid and small cap indices gained and pretty much closing at the high point of the day, with the rally continuing there in many spaces, many sectors. Manufacturing, I'm using that word very loosely, but a really broad sort of list of names there which participated. Manufacturing, EMS, defense, water purification, some of these themes which shone through once again. Ports, for example, JSW Infra was a big mover. Some of this stuff doing very, very well.
Well, IT was the top sectoral gainer, 1.7% on the index, but it was off from the session highs. At noon, it had a gain of more than about 2%, so it lost about 0.7% from the top of the trading session. But names like Tech Mahindra, Wipro, TCS, Infosys all see a lot of buying. Private sector financials like HDFC Bank, ICICI Bank also contributed on the way up. On the way down, you had softness in State Bank of India, NTPC, Eicher Motors, Apollo Hospitals, Dr. Reddy, L&T. These were some of the standout users.
Okay, all right. Well, on that note, though, we'll have a wrap up on this edition of Closing Bell. You stay with us, though. Markets Forward comes up next.